And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld, taking you through to the closing bell with a global simulcast. Carol Massar and Tim Stenovec join us from the radio booth. Welcome to all of our audiences across all of our Bloomberg platforms, including Carol Massar, our partnership with YouTube.
Yeah, exactly. Across all of our platforms, we've certainly seen markets bounce around, definitely off their lows of the session as we head into a close. Kind of a quiet market, but I do feel like Katie got a lot of things coming at investors, a potential government shutdown. We also had some big news in terms of the war in Gaza, and we're also awaiting a jobs report on Friday, if indeed we don't get that government shutdown, which of course that could prevent the data from coming out.
Right, that's the big if, whether or not we actually do head into what a lot of folks are saying looks more certain than not that we are going to see this government shutdown as both sides dig in.
Do you think it happens, Katie?
All right, so we keep an eye and we talk about sort of where this market is going, guys. And I just want to just kind of point out, we talk about the idea that seasonally this was supposed to be a month where, if not certainly a down month, certainly one that was going to be a little bit more muted. You look at the gains we're sitting on and you look at what sort of led us to those heights and the multiple record highs that we've had so far this year and, of course, this month alone. And the big question right now is whether that continues for the rest of the year. Interesting note out this morning by the strategist over at Goldman Sachs talking about the ability for a year-end rally, and positioning in this market seems to suggest the same. We talked about it last week, the idea that everyone is selling puts, the idea that people are protecting more against potential upside melt up rather than any sort of downside, the idea that accommodate a Fed, potentially accommodate a fiscal policy, and an earnings season up ahead that a lot of people have high expectations for, that could keep the rally going. Green across the screen here on this Monday afternoon with the Dow Jones Industrial Average up about 0.1% or 70 points. The S&P higher by about 18 points or 0.25%. NASDAQ Composite up about 0.5 percentage point, as is the NASDAQ 100. The Russell 2000, that is your relative laggard, but it is going to close in the green, only up by about a point. But I think given all of the concerns out there, Carol Massar, coming into this week, I think a lot of people will take it.
Yeah, it's really kind of fascinating to see the continued churn higher. I mean, earlier in the session, you kind of had an even split between winners and losers. But Katie, here at the close, 308 names in the S&P 500 gaining ground on this Monday, 195 to the downside.
Yeah, pretty good breadth for what are pretty contained moves on the benchmark level. Same story when you take a look at the sectors. The circle is very green today. Consumer discretionary and tech leading those gains. If you're looking for something to nitpick, you're going to find it in communication services, off by about 0.5%, and you're going to find it in energy, off by nearly 2%. But as you can see by how small that slice of red is, that has very little bearing on the overall benchmark.
All right, guys, let's get to some individual gainers. I had to talk about AppLovin because this one at its highs today, up about 11%, finishing the day with a gain of about 6 1/3 percentage points, 6.3%. It's a top gainer in both the S&P 500 and the NASDAQ 100, I believe hitting an all-time high today. It's a mobile app marketing company, and analysts have been weighing in on this one in a big way, raising their price targets, creating new street highs, one after another. I mean, on Friday, Piper Sandler raised its price target to $740 from $500. On Friday, also UBS raising its targets to a street high view of $810 from $540. Stock closing at $712 and change. Today, Morgan Stanley raised the target on it to $750 from $480. A little catch up there, maintaining its overweight rating. Basically, what analysts are saying, they're talking about momentum in gaming, staggering profit margins, phenomenal growth. That stock has more than doubled this year. All right, got to talk to cannabis stocks. Investors pretty high. See what I did there?
Oh.
I know. It's so lame. Tilray Brands, ticker TLRY, up about 61% here at the close. So pretty much finishing the day at its highs of the session. President Trump posted a video on social media yesterday that touts medical benefits of hemp-derived CBD for seniors. So we saw some excitement in that name. And I just wanted to put out Electronic Arts. I mean, this one about to be public no more. Stock was up about 4.5%. This after agreeing to sell to a group of private investors in a deal that values the company at about $55 billion, marking the largest leveraged buyout on record. I think there was about $20 billion in debt that's going to be part of that deal, and that's after about a 15% jump in the stock.
Can I just
on
add
Friday.
an honorable mention? The big move we saw in
I would
Etsy
expect
today,
no less
up about
from you.
16%, Carol Massar. I know you're a big shopper. That's the best day going back to 2022. But all this idea of integrating ChatGPT and the chatbots into the platform here, both Etsy and Shopify getting nice bids on the day.
Don't tell my husband, though. I thought you were my friend.
All right. I want to go with some of the stocks that were lower today. Hard to find them, but I got three for you. Carnival Corporation, the parent company of Carnival Cruise Lines, among many other brands, the largest cruise operator in the world. For much of the day, it was the worst performing stock, down 4% on the day. It was the worst in the S&P 500, even though the company came out with record revenue, adjusted earnings per share for the third quarter that beat the average analyst estimate, and they raised their full-year earnings forecast for the third straight quarter. They said there's a record pace for forward bookings and improving net yields for next year. They've already got half of what they have offered booked up already. That's for the year of 2026. We did speak to the company's president and CEO just moments ago. He said the trajectory is good, the consumer is strong, he's extremely optimistic, and he's seeing strength from everywhere in the United States right now. Still, shares finished down 4% today. Williams-Sonoma shares fell 4.7%. This was actually the biggest decliner in the S&P 500. It's the owner of West Elm, Pottery Barn, and more. President Trump out saying that he would levy new tariffs to boost the domestic film and furniture industries through a pair of sweeping plans. He did post today that he would be, quote, imposing substantial tariffs on any country that does not make its furniture in the United States. It is unclear exactly how that would work because companies, not countries, manufacture furniture, and the duties are charged on specific imports, not governments. The White House did not respond to a request for further details. Shares of Williams-Sonoma down 4.7%.
You have that cloud couch, right? About $8,000 or something.
I don't even know what that is.
No, I don't. I sit on the floor. I'm still using my futon.
Futon guy. It's ever since college, right?
Yeah, I mean, honestly, best $200 I ever spent.
Okay. Beyond Meat. Shares just cratered today, down 36%, lowest on record. The company made an offer to debt holders that would erase more than $800 million of debt. The offer allows debt holders to replace convertible notes with new bonds and shares of common stock, with 47% of holders already agreeing to the exchange. Romaine?
I just want to put an honorable mention on there. You saw the drop in Open Door. I know you're a big fan of that, Tim Stenovec.
Meme.
And of course, those shares are down for a second straight day. A lot of criticism right now about what Eric Jackson has been doing. Of course, that vigil outside of Drake's house in Toronto, and now other investors basically saying that, look, be careful. All right, we do want to turn back to some breaking news, and this involves the budget impasse going on in Washington. We are learning now that Republican and Democratic lawmakers are now currently meeting with President Trump at the White House to hopefully try to create some sort of deal to avert a government shutdown, which would take place at the end of tomorrow, Tuesday, the end of September 30th. I do want to check in on yields because, believe it or not, I mean, that was actually a big focus for a lot of the market moves that we saw today, particularly when it came to the rise that we saw in gold, particularly when it came to the drop that we saw in the dollar. And we did see a bid come into treasuries. That actually pushed yields down across the curves. Modest drops, to be sure, 1 basis point on the short end of the curve and 3 to 4 basis points on the longer end of the curve. But obviously, this is going to be way in focus, particularly if we get to tomorrow night without a deal, particularly with that big jobs report hanging over us this Friday.
All right, speaking of reports, we do have some earnings starting to come out ahead of the official start of earnings. Vail Resorts out, and we are seeing this stock down a little bit in the aftermarket, down maybe about 2%. Let's get to the outlook. Sees 2026 total reported EBITDA of $844 million to $906 million. It also talks about the fourth quarter, the quarter that was. Fourth quarter loss per share of $5.08. That's a little bit steeper than what the street was expecting for. They were looking for a loss of $4.73 a share. Fourth quarter net revenue, $271.3 million. That too is just a tad light. The estimate on the street was $274.4 million. And they also talked about fourth quarter total skier visits at 753,000, excuse me. The estimate on the street was 772,916. So you can see the stock, like I said, down already this year, about 20% year to date, taking another hit to the downside, guys, down about 3.5% here.
Yeah, more bad news for Vail. Light across most measures, as you mentioned, Carol. And you think about what a rough year it's been for Vail in 2025. That ski patrol strike all the way back from January, certainly some bad PR there. They actually brought back their old CEO. So a boomerang there, incurring some costs there. You add it all together, and another rough quarter for Vail.
Yeah, Rob Katz taking over for Kristen Lynch a little earlier this year. Surprised, I think, a lot of people that he actually came back. I'm looking at the press release, and buried in the press release is some information that investors might not love. Past product sales through September 19th, 2025. Remember, they have the Epic Pass. The idea is you buy it early, so revenue for the year is not as bumpy, but it gives a good idea of who's going to actually be visiting those mountains and that portfolio of mountains for the remainder of the year and into next year. Those sales decreased approximately 3% in units, though increased approximately 1% in sales dollars as compared to the prior year period through September 20th. So even though they're more expensive, if fewer people are going, that means less spent on on-mountain dining, less spent on rentals, less spent on lessons and more.
But this gets to this idea, and I mean, we know that this is kind of a business, at least certainly in the modern age, that caters to a higher income consumer. But we've talked before about some of the issues we were seeing in Vegas with regards to a different type of leisure travel, and the idea that some of this is kind of a cell phone. You know, it was kind of like this hubris of continuing to raise prices and milk more things out of your customer. For a while, they were onto it, but it now seems you're starting to see some cracks in that model. You're certainly seeing it in the casino space, and maybe you're starting to see it skiing as well.
Well, it's like falling off a cliff right now.
You don't want to do that when you're skiing.
Sorry, that was pretty
stay
sad.
on the trail.
All right, but shares of Vail Resorts, they're down about 2.7% here in the aftermarket.
I almost fell off a cliff once, but thankfully they had that little, that wooden fencing thing.
Yeah.
But I got
Were you on the
tangled up in
bunny
it.
trail? What do they call them?
No, Romaine's like
I was on the Triple Diamond.
Hey,
are you?
on Fridays in the winter, I'm like, Romaine, what are you doing this weekend? He's always going skiing.
Wow, I'm impressed.
Can't keep up.
Remember our old colleague Eric Schatzker? I don't know what happened to him. Did we fire him or something?
No.
But he literally goes on these trips where he has to take a helicopter up to the top.
Yeah,
and then
because
they
he's
just jump out
Canadian.
of
He's
the top of the
serious.
helicopter.
He's
And I remember he
serious.
showed me a video, and I was like, dude, I'm never going skiing.
Built
with you.
different.
All right, well, shares of Vail,
Hello,
they're
Eric.
down about 3.5%. We're awaiting Jefferies expected to report too after the close.